The revenue picture is softer than what the market has penciled in. Unlike Westpac, ANZ doesn't have the cost release to offset this, Mr. Storey said. Although investors cheered Westpac's better-than-expected performance on costs last week, ANZ said its operating costs would be broadly flat in the first half. However, investment spending would be higher to embed the ANZx digital transformation program, as well as within its retail and commercial divisions. ANZ's margins in the first quarter declined by 8 basis points, under pressure from continued tough competition for new mortgages. The decline in margins to 1.57% was worse than consensus expectations, despite being offset by 2 basis points of positive contribution from funding benefits, said Jarden analyst Carlos Cacho. New Zealand loans and weaker markets income dragged margins down by 5 basis points and 4 basis points respectively. But Mr. Cacho said higher interest rates and changes in deposit pricing would provide positive impetus in the next quarter. Guidance suggests pressure should moderate in the second quarter, with the impact of rising rates, predominantly in New Zealand, and recent deposit pricing changes, Mr. Cacho said. Advertisement. Citing structural headwinds impacting the sector, ANZ said its Australian first quarter home loan balance sheet increased slightly, but was troubled by higher exit rates. Given the high levels of refinancing activity in the sector, managing both attrition and margins remain key areas of focus, ANZ said in a statement to the stock exchange. Westpac said last week that a rush to lock in fixed-rate mortgages and heavy competition had hit margins. Mr. Lyons said ANZ's proportion of fixed-rate mortgages, which are locked in at lower interest than the standard variable rate and therefore yield a lower margin, has declined steadily across the first quarter, from 50% to 46% to 40% in January. Improving response times. The bank said it had made solid progress in Australia to improve systems and processes for simple home loans, where it says its application times are now in line with other major lenders. Advertisement. ANZ said it is now concentrating on improving response times for more complex home loan applications. At the November annual meeting, Chief Executive Shane Elliott said the bank's vastly longer approval times stemmed from the higher proportion of mortgages processed for self-employed customers. Mr. Lyons said ANZ's 3-month annualized growth in mortgages was at 0.2% versus system growth of 8.9%, but the bank remains on track for achieve its second-half target. ANZ still appears on track for its guidance of some mortgage growth in the first half, given small growth in the first quarter, and then back to major bank system by the second half, said Mr. Lyons. Considering a bigger buyback. ANZ reported a solid capital position driven by its institutional business, saying it has completed $1.015 billion of the initially touted $1.5 billion buyback announced last July. It said it would look to expand it if the prevailing economic conditions are right. ANZ's capital position continues to provide flexibility to return further surplus capital to shareholders, and ANZ is considering increasing the size of the current on-market buyback, the bank said. Advertisement. Any decision will balance the importance of capital efficiency against maintaining an appropriately strong balance sheet and continued monitoring of the economic situation. Markets revenue disappointing. Rising interest rates are expected to create a tailwind, Westpac Chief Executive Peter King said last week, as the bank reported a better-than-expected performance in its markets division. ANZ, however, flagged soft trading conditions for the markets business in October would hurt first-half revenue when the bank reports in May. Lowering and simplifying fees for retail and commercial bank customers from March this year would also hurt earnings, ANZ said. While better aligned to positive customer outcomes, the changes will have a negative transitional impact on other operating income in financial year 2022 of around $140 million, spread evenly across the two halves, ANZ said. Click here for the Australian Financial Review's interim profit calendar.